concise approach to top-down market strategies and the forces affecting investments. That's the spoken word on investing.
Let's get the spoken word now on defense stocks from our chief equity strategist, John Blank, who's here with me. There's something going on in this sector here, John. Since the presidential election, these defense stocks have kind of sprung back to life.
Yeah, well, here we go. We have Donald Trump, who likes generals. He loves generals. We've got more generals working for this presidency coming in than we've seen in a long time. Okay. Retired generals is the brand to be. So, not surprisingly, on top of that, we have three elements of a, quote, Trump trade to get through. Two of them are positive, Terry. One is negative. But let's talk about the two positives, right? Mm-hmm. One is we've got not only Donald Trump and the generals, but we've got a Republican Senate and a Republican House of Representatives. So the checks and balances are very weak, which means spending and tax policy that's made by the presidency is very likely to pass. So there's uncertainty is coming with the spending decisions, and markets like less worry. They like less uncertainty. Right. So markets rise just on that alone. Okay. So that's one thing. The other thing is we've got an interest rate rise, right, which is pushing people to sell bonds, right? And they're selling bonds, and that's driving money either into cash or stocks. So there's a rotation going on here, which is just get out of bonds because the 20-year bond bubble is blowing up, which again has nothing to do with Trump. It has to do with a 25-year thing that looks like it's over. So if you're just selling bonds and you move to cash or institutional, you've got big trillions of dollars of bonds. Even a significant minority of that is hundreds of billions of dollars. Some of that's flowing into the stock market, and that's also part of that bull market. The third thing, though, it's negative. It's just the rate structure is still being bent and twisted by Draghi here with a 9.5% unemployment rate and Yellen here with a 4.5% unemployment rate. They are still fighting, and the differences of what rates should be, now we're at, 0.75 for the Fed and 2.5 on the 10-year. That's a 1.75 spread. It's very narrow. Mm-hmm. So there is movement in rates, but it's so narrow. And what happens when you have a tight economy and an economy that's loose is that adjustment has to happen price-wise. And it's all happening in currencies. The yen, 100 to 118. The euro, 115 to 103. The pound, 140 to 120. Right? Everywhere you look in the world, even the Chinese renminbi, we're looking for a 7 from 6.5. Mm-hmm. The money's sucking out of the world as this rate thing I talked about is happening, because nothing can happen, but everything has to happen, and that means the currencies move.
So what does that all say about these defense stocks remaining lively going forward?
Defense stocks have no currency effect. They are domestic stocks. Second, they can get their spending out of the government. You got your Northrop Grumman's and Lockheed Martin's, and they're 15 minutes from the Pentagon, right? Yeah. We just heard from Boeing. They're moving out of St. Louis with their defense stuff to Washington.
Yeah, you were just on network television not long ago talking about that.
Right. So yeah, why is Washington D.C. voting for the for the government, and they're changing the policies, and they're no longer a southern state? Is because there's so much defense industrial complex around D.C. So that's all working. You think about it, whether it's the currencies, no domestic, whether you got the House and the Senate, you got a president who's got generals. It's all building this thing, and we see with the defense analysts, which drive the estimate revisions, which drive our ranking, a real dominance, right? 40-5 in terms of how many upgrades and downgrades. And that changes week to week. Don't quote me on that. Go into Zach's page and find it. But I guarantee you will see that keeps on. Now, lately, as you know, we've seen Donald Trump tweet that he's going to pull back on some of his billions. But truthfully, these stocks haven't pulled back that much relative to that, because there's this sense that, the pipelines are already full. The times that this is going to happen once that tweeting goes away is going to be relatively minor. There's still the bulk case to be made for a lot of these stocks.
All right, so that being said, give us some names.
All right, let's get some names that are big first and are probably the wrong ones, but right, because they're big and everybody knows them.
But if they're wrong, it doesn't do us any good, John.
Right, well, these are, if you own them, then you might want to sell them, right? General Dynamics, right? Ticker GDI or GD is a big company. Mm-hmm. The other one is Northrop Grumman, NOC, ticker NOC. Mm-hmm. Northrop Grumman, General Dynamics are these big defense stocks. So if there's a pullback, like I think there will be, or has been because of the Trump tweets, you want to wait for that to end and then get into the bigger names. So big names buy the dip. Because we do see the Zacks ranking, we see the estimate revisions, but we also see poor valuation scores, which means you're looking for a dip buying opportunity on big defense stocks. Little ones, now let's get into little ones. I think these are really where the play is.
Okay.
And that is like an Agility Holdings, Terry. I got this one with ticker EGL. Agility Holdings is, a 1 or 2 billion market cap company. They're not 50 billion market cap companies. These are the companies that can grow 30% a year, have found their way to be nimble in that space. They have the growth. They haven't been discovered by the broad market. They're not in as many ETFs. They can be the play to look for in this type of Zacks ranking estimate revision revival.
Interesting, but in this group, how many of those exist?
More than you think. I mean, you got to look. Go to Zacks.com, look at aerospace and defense, go through all of the names and stay on top of them. This is an area where our systems really deliver because Agility Holdings, you say, what's that?
Right, right.
That's what we want.
Yeah, that's my point.
Yeah. Huntington Ingalls, I've thrown that name out in Large Cap Trader. We've done quite well with that stock. It makes the Navy ships.
Okay, well, we'll take your word for it. You're the one who looks at it under the microscope. Thanks for that, John. And don't forget, you can always take a look at commentary by John and others on our website, Zacks.com. Get over to the homepage and check it all out. With John Blank, I'm Terry Ruffalo.